Three stocks I'm buying February 2023. So far this year, it has been amazing for investors, and I'm still buying stocks, have been for the past year, will continue to do so. And in this video, we're going to be discussing a wild card play, a super high growth stock, and one that is my largest position. I'm going to make it quick and simple, but also go over exactly everything you need to know about these three stocks. Now, before we get into those stocks, I want to give you my brief take on the overall markets. I personally believe that in 2023, we will have a bull market. We're already seeing a lot of promising signs when looking at tech companies, especially the super high growth ones that have been destroyed. A lot of companies have done layoffs. They're focusing more on profitability. A lot of their earnings estimates have come down, and companies continue to beat those estimates, and guidance for 2023 is not actually as bad as people think. We also have a lot of positive news coming out on the inflation front, where things appear to be slowing down in a continuous trend at this point, and Jerome Powell has even coined disinflation as the hottest new word of 2023. It's also important to note that the American consumer appears to still be very strong. Retail sales beat estimates recently. Unemployment remains stubbornly strong. And simply put, markets are always 6 to 12 months ahead of the actual economy. So people confuse the economy with the stock market. We might have a recession in the future, a hard landing, a soft landing, some kind of landing, hopefully not a crash and burn type of landing. But I think that the market is looking forward and looking ahead of any potential downturn. Thinking about 2009, 2010, for example, right after the great financial crisis, unemployment actually continued to rise for about 8, 9, 10 months after the market already bottomed, right? You can see unemployment rose to about 10% at the beginning of 2010, but by then the market had already well exceeded its lows from 2009. I don't think it's the right mindset that you have to time the market to, wait for the recession to happen and wait for things to get better. I mean, you can never really time a bottom anyway. So you should just pick your spots, pick your stocks, and that's exactly what we're doing here today. I'm not buying a ton of new positions, but I am continuing to buy some of them, some for trading, some for investing. And again, one of these positions is my largest position in my portfolio. But first, let's talk about stock number one here. Stock number one is going to be Salesforce stock, the software giant. So a lot of these huge Fortune 500 companies, but also small to medium-sized businesses, they have over 100,000 clients. And all of these companies need software in order to manage their workflows, see exactly what each employee's tasks are, delegate cases to them for them to do, back and forth between clients with emails and calls. You need records for that. You need the ability to track leads, just an overall great customer management platform that people use for productivity. If you're watching this video and you work for Amazon Web Services or even a lot of retail companies, you've probably worked with this software before and you recognize how important this is to your everyday workflow. The great thing about Salesforce is that there is pretty much no alternative. This is arguably one of the most important software companies out there and one of the most successful. The thing with Salesforce is that it has been growing very consistently. If you look at the 5-year revenue trends, it's about 25% compound annual growth. Doing that consistently year after year after year leads to big growth. And we've seen this company go from 10, 20 billion in revenue to 30 billion in revenue here. And they do have a projection or a goal to reach $50 billion in revenue in the coming years. However, profitability, surprisingly, is actually not very good at this company. It's been better some years than others, but especially the past year because of foreign exchange headwinds, because of just simply macroeconomic conditions, companies taking longer to renew their subscriptions, and this and that is causing this company to not be as profitable. Share-based compensation as well is a thing. Having too many employees, again, with layoffs being a big theme of tech companies recently, that is something that is at the forefront of everyone's concerns here. If they can eke out an extra percentage or two when it comes to their profit margins, that would obviously translate to a couple $billion in net incomes. And this is what a lot of big name activist investors believe as well. Look at companies like Elliott Management, Starboard Value. A lot of these active investors are building positions in Salesforce and shaking up the management team, trying to, get in there and spark some change from within and hopefully get this company to focus even more on profitability And when you look at some of this data when it comes to valuation, you can see that Salesforce arguably trades at a discount to its peer group. You look at enterprise value versus forward revenue, peer median is 6.7 times versus Salesforce 3.8 times at the time of this data collection. Free cash flow as well, trading below its peer median. You look at growth numbers, revenue growth year over year is 21%, revenue growth forward 17%. This is also above its sector median. So not only is it trading or at a valuation below the sector median, but it's also growing faster than those companies too. So somehow when you look at a mixture of growth and value here, the stock appears inexpensive. And obviously that goes back to if we can actually prove this company can improve its profits, its operating margins, net income margin, etc., then we can really get going here. So that is Salesforce. I got in about $165 per share, right at this support zone between 160 to 170. And I'm really, again, targeting for a move above 200 here. By the way, if you want to get my trading alerts in real time, make sure to check out the StockDads Discord Premium membership. This is where we post all of our trading alerts for stocks, options, and crypto. We also have live trading webinars, recorded video courses, and a one-on-one mentorship program. Be sure to check it out at stockdads.com or click the link in the description. Stock number 2 is Enphase, a high growth company in the solar industry. Enphase has sold over 3 million solar systems globally. This company has a huge footprint and it's a multi-billion-dollar company. The stock is up almost 50% in the past year and over 7,000% in the past 5 years. Absolutely astronomical progress this company has made, and it makes sense as we continue to trend towards ESG, renewable energy resources, the Inflation Reduction Act increasing demand even further for these things, and making it more affordable, a lot of subsidies going to these companies. This is going to be a huge thing for the next 5 to 10 years even. In 2022, Enphase increased their revenues by about 70% and net income by almost 150%. Despite the company beating estimates for revenue and earnings last quarter, somehow the stock actually went down. I think that Q1 guidance was a little bit weak, but I mean, you got to look further than that. If you look at the latter half of 2023, I think they're going to still grow. I think when you had a year with 70% revenue growth and you've multiplied your income, I think that probably things are going to slow down a little bit. But in the long term, we see all of those trends that I mentioned are going to continue to get bigger and bigger and bigger. I personally started buying when it was about 220 down to 200 average. So my cost basis is somewhere around 214. I think that that's really solid. 200 looks like a really strong support level from the past as well. Stock was as high as 300 just a couple of months ago. I think that it will get back up to there eventually. For now though, this is a really good risk to reward ratio. I mean, you buy in at around the low 200s and there's a lot of potential upside as long as that support level holds. This is not necessarily a cheap stock, right? On a trailing PE basis, it's about 75 here as of this recording. Could be worse. This company has trended to 100 to 200 PE ratio at times, but I mean, think about the huge, almost 100% growth on an annual basis, and it's not that crazy. I mean, it's not a cheap stock, but it's a great company. So, it's a toss-up there. But on a forward PE basis, this is actually going to be about a 30 PE ratio, and you do see those profit margins and gross margins, according to these historical trends, continue to improve. So profitability is going to get better and better and better. All right, and lastly, stock number 3, my largest position in my investment portfolio. Some of you may already know it, and it's gonna be Perion Network. Peri is a $34 stock as of this recording with a $1.5 billion market cap. This is an ad technology company that has grown tremendously, almost 1,000% over the past 5 years. It's up about 50% over the past year. Even despite a bear market and recession, this company is growing tremendously. Revenues up 30% last year, net income up over 100%. And this is not a fluke. If you look at the past 3, 4, 5 years, that's why the stock's up so much, right? Compound annual growth when it comes to revenue and EBITDA has consistently been really, really high. Revenue has been consistently growing at over 30%, and net income and EBITDA has been growing 80 to, again, over 100% here. So It's a phenomenal company, started really small and it's getting bigger and bigger and bigger and bigger. A lot of huge clients. I mean, this is the Microsoft partner, advertising partner when it comes to Microsoft Bing. I mean, this is a huge thing that everyone's talking about right now. AI, ChatGPT. Microsoft's gonna gain market share and eat Google's lunch. This was recently mentioned in Microsoft's earnings call where just 1% of market share gained in the search segment is going to be billions of dollars in revenue to Microsoft. If Bing gets a little bit better, that's going to be a lot better for Perion because Perion's making this much money from search right now at the size Bing is. But if Bing doubles, from whatever market share it has, about 5-10% market share, if they get 15-20% market share, that's going to be huge news for Perion. But besides that, right, despite everything that's going on with ChatGPT, we also have huge growth in the other areas of Perion's business, like display, where they've done a lot of cool things with their retail ads. They have interactive ads with Walmart, Beyond Meat. They've done things for Mercedes, a lot of major clients. Perion has a great mix of supply and demand, where a lot of other players in this space focus on only one of those. And Perion also has a unique proprietary technology called Sort, which is a cookieless solution. That's going to be a big thing when cookies are finally banned, and privacy is a bigger and bigger concern for companies and consumers. And it's something that management is actually considering licensing out to other companies with this technology, and that could be another area of growth here. Speaking of growth, for 2023, this company is projecting about a 14% growth in revenue and EBITDA. I think that is a super lowball conservative estimate. And if you actually know this company, you'll know that these are lowball estimates and they're gonna absolutely crush those. This company has increased its guidance last year in 2022 by about 3 times. Like beginning of the year, beat and raise, and then later in the year, beat and raise, beat and raise. Pre-announcements, 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 and the analysts love it. Investors like me love it. The company may underpromise, but they do extremely overdeliver. Same thing in 2021. I think they guided for about 15% at the beginning of the year, finished the year over 30% revenue growth, so doubled their own estimates. With all that growth in mind, let's talk about value here, because this is not just a growth stock that is not profitable, it's actually a value stock too. This company has no debt on its balance sheet. It has over $400 million in cash and cash equivalents on its balance sheet right now, giving it an effective enterprise value of $1.1 billion. So you subtract out the net cash from this company, from its market cap, and you get essentially its true value here. This company trades for less than 2 times its enterprise value to revenue, 2 times price to sales, and 16 times PE. Like, these are just joke numbers. Management team that has never disappointed investors over the past 5 years. I'm speechless. So I personally have a $24 cost average, and I plan on holding my shares as long as possible until the fundamentals change. Something, disappoints with the company, I might reconsider my position, but otherwise I'm holding every single share here. And we're looking at a multi-year breakout. I mean, this is at multi-year highs. Perion in the past, like a long time ago, before the current CEO, Duran, took over and completed a huge unprecedented turnaround of this company, took this from a $2 stock to $34 here today, because of that focus on driving profitability, diversifying the business with record revenue, record levels of growth, a huge balance sheet. I think that the fair value here is going to be a minimum of $45 per share. That's my personal target for 2023. Doesn't mean it gets there. Who knows what the future has in store for us, but that's just my personal take on Perion stock. So with that being said, guys, those are my 3 stocks to buy in February 2023. Hope you guys got a lot of value in seeing my analysis and thought process with some of these stocks. Overall, I think all these will do very well. You have Salesforce, Enphase, and Perion, software company, solar company, and ad technology company. Let me know in the comments below what you're buying in February 2023. Again, check out the StockDads Discord if you want my trading alerts, as well as my teams for stocks, options, and crypto. We also have that mentorship program, video courses, live trading, and so much more. And I'll see you guys in the next video. Take care.